sometimes it's hard to tell whether these things are live or not live yet. Special thanks to the Finastra and Microsoft team for inviting me to moderate this session today, and also to our panelists as well for taking the time to join us. Now, financial inclusion has always been a top policy agenda in the Philippines, and that's reflected by the fact that Philippines was ranked fifth worldwide when it comes to promoting financial inclusion in a recent study that was done by the Economist Intelligence Unit. Yet, despite that, nearly 70% of the population still remains unbanked. And now BSP is set to release its digital banking framework very soon. It's seen by many as a tool in its arsenal to tackle financial inclusions. But the question is, are virtual banks the right answer to the financial inclusion puzzle in the Philippines? Now, joining us today to discuss this very subject, we have two C-levels from two very successful digital banks in the Philippines. First, we have Lito Villanueva, who is the Chief Innovation and Inclusion Officer for Rcbc. Now, Rcbc's digital outfit Discatech saw 2 million downloads in less than 2 months of launch. We are also joined by Vijay Manoharan, who is the CEO of CIMB Philippines. It is a digital bank who secured 1 million customers within the first year of launch, and they're poised to see over 500% deposit growth in 2020. I'm sure that number has been revised since COVID-19 to have an upward trajectory for sure. And we have two industry experts from Finastra and also Microsoft. From Finastra, we have Shweta Jain, who is the Director for Cloud and Digital for Retail and Challenger Banks. And we also have Basudev Banerjee, who is the Industry Executive for Financial Services in the Microsoft Asia Pacific. Thank you for joining us, everybody. Welcome to the show. So let's jump straight. You're welcome. Thank you for joining us. So let's jump straight into the questions. Now, with BSP set to issue the digital banking framework very soon, what kind of impact do you foresee this having on the financial services landscape in the Philippines? Why don't we start with Lito? What are your thoughts on this, Lito?
Okay, thank you, Vincent, and of course to all my co-panelists and to all the viewers, online viewers, good morning. To answer that question, Vince, I think this is a welcome move, no? Especially during this pandemic. The BSP, our regulator, has been very dynamic and very active when it comes to really promoting and pushing digitalization in the financial ecosystem. And this digital bank framework or circular that we are about to officially issue, in the industry would be something of so much value for all the digital players in the industry. So this would really pave the way for more digital players to be able to have that, that ability by which they will now be able to expand their operations. And in fact, even before this digital bank framework that we're talking about, BSP has been very advanced when it comes to providing, enabling regulatory framework in supporting or even promoting a digital landscape, amongst players in the industry. Of course, for example, the adoption of eKYC, the adoption of outsourcing, of even cloud banking. I mean, these are some of the things that they have done thus far for the past 3 to 4 years, And in fact, the digital bank framework or regulation would just be, how would I say it, be one of those items that will really create more digital banks in the Philippines. And in fact, you have several players right now doing it. And of course, during this pandemic, we've seen that the exponential growth of consumer adoption doing digital transactions. And even beyond COVID-19, even when a acceptable vaccine is available in the market, and as soon as all the 7.5 billion people in the world would have been vaccinated, I think for most developing markets, including Philippines, would remain to be using digital digital platforms in their everyday living.
I think we're seeing similar predictions in other markets that this kind of digital habits will remain post COVID-19 as well. Now, just to quickly provide some context to the audience who's tuning in today, because BSP is supposed to release the framework very soon. However, there are already some new players that's setting up a digital banking framework. Are you able to provide the insight on how that works with the rural banking license?
Okay. Well, right now, prior to the digital bank framework that is about to be released by BSP, some of the digital bank players would be using or would have secured a banking license under what we call the rural bank license. Because right now, in the digital, in the definition of bank in terms of banking classification, there is no digital bank classification. You only have, universal bank, commercial bank, rural bank, thrift bank, cooperative bank, or even Islamic bank or Alamana bank. So the thing here is that there is additional classification, which is digital bank. But in the absence of the digital bank, most of these players right now who are currently operating in that digital bank landscape is now using the rural bank license. But of course, with the rural bank license, it has some limitations as well, because it provides for a physical, in terms of number of branches, in terms of physical physical head office, etc., etc. So, but of course, being a digital bank, you're not supposed to have any branch, right? So it's supposed to be practically everywhere, right? So so that's why the regulator, the BSP, thought of just coming up with this new definition or new classification that will now be part of the regulation, the banking regulations in the country.
Thank you for setting context for that. Now, Vijay, what are your thoughts in terms of the impact of this new digital banking framework on the landscape in Philippines?
Thanks for the question, Vince. Appreciate that. And I also concur with what Lito had shared. So my view is I feel that this is a positive move to drive more players to enter into this market, including those non-bank and technology players. And with that comes innovation, new technology enhancements, and different ways of doing things more advanced. So ultimately, I feel through liberalization and opening up the space to allow more digital banks to thrive, consumers will stand to gain, and they will stand to benefit the most. So in a nutshell, also, I expect this to also improve the overall customer experience and really provide true value, genuine value, and avail access to banking and inclusion in a more affordable and a more sustainable way in the long term. I think this is a huge step forward. I think what BSP is undertaking is the right thing to do, and to promote competition and promote innovation. This will then force the incumbents to get out also of their comfort zone, to innovate and provide more value. And in the whole sense of this thing will be the consumers will stand to gain. With competition, with innovation, the end consumer, the everyday Filipino, they will tend to benefit from this new sort of framework that's coming to bear. So I feel it's a good thing all around.
Excellent points, and I think Shweta will probably concur with you as well, because where she's based in Hong Kong, we're seeing the virtual banks being launched, and incumbent banks are just reacting by removing fees and making services more affordable for people over there, right? So I'm sure we'll see similar trends happening in the Philippines. So let's move on over to Shweta to get her thoughts on the impact on virtual banks on the Philippines landscape. Shweta, you have the floor.
Thank you, Vincent. Morning, everyone. And I do concur with my panelists. And we do see impact on three areas. They did cover very well on how it would create more opportunities. You did mention that 70% of the population in Philippines is unbanked. So this digital bank license will really open the emerging markets for a financially excluded set of individuals, SMEs and micro SMEs. It's a completely new segment that will open up. There are going to be technological advances that we will see. The cost of servicing these customers is going to come down significantly. And that's where we believe as technology providers that we work with banks, and BSP has taken a very good step in opening up the market, because in the end, it's going to benefit the consumers in the Philippines market. There's going to be a lot of innovation also, we believe, that will come. Innovative products. There's the eKYC services, which BSP has been working. How well you can understand your customers, the data. There is going to be more of data inclusion that we'll see. There's going to be reliable information on their customers. Their digital footprint is going to be more recognized now, and everyone will benefit. It's not just the digital banks who have got the opportunity. It's also going to be the incumbent banks who will really benefit from this new segment and from the technology advancements that we'll see in the Philippines market.
Okay, and thank you for that. Moving on to Basu, and any thoughts you'd like to add on this particular question?
Yeah, hi, good morning, Vincent. Good morning, others. I echo what the other three panelists say. What we are seeing is it's not only for the unbanked population. What we feel is technology is helping even the banked population to drive their business growths in respective areas. Many of these markets, including Philippines, is also a cash-driven economy. And with all of these digital initiatives, digital banks coming in, the cost of carrying cash is going to go down. And that will increase the feasibility of the small and medium enterprises as well as retail businesses. So that's where we feel that technology is going to play a super role. And it's a right way to go towards digital enablement of the economy through these digital banks.
Thank you. So just to play a bit of a devil's advocate and have a bit of a contrarian viewpoint, right? So I think the common narrative that we think about when it comes to challenger banks, digital banks, is that it largely addresses the issue of the unbanked population, the underbanked SMEs. But in the Philippines, given that there are still a lot of infrastructure issues when it comes to internet access, internet quality, and naturally digital divide within the population still exists as well. So I guess my question is whether or not a very digitally focused solution like a virtual bank is a right answer to promote financial inclusion in the Philippines. So I'll open this question to the panelists. Whoever would like to go ahead first, please feel free to go ahead and take the question.
Yeah, Vince, I have an answer to that, because I think you are very right when it comes to, in terms of your question in putting in some context when will virtual banking be the solution for an unbanked market such as the Philippines? In given the fact that, for example, you're talking also of the infrastructure. Communication infrastructure and the logistics, etc. Right? So I think the good news in the Philippines, given this pandemic, our telcos, our MNOs, the mobile network operators, have practically leveled up in terms of providing, connectivity or enhanced connectivity with much improved data services across the country. Because remember, we're not just talking about financial services, but also remember that even for our education sector, all our students are now on distance learning education. So practically before COVID, you would only find at least one computer or one laptop or one desktop in a household, right? But now, the number of laptops, or tablets or desktop that each household would have would be dependent on the number of children studying, right? So imagine before COVID, in a household of just one being shared by everybody in the household. Now you find people in the family in one household to have practically 1:1 ratio, wherein one child would have one laptop, tablet, or desktop, and that particular individual would have to have data access as well. Because the distance learning education is a simultaneous thing, right? So, for example, I have 6 kids, no, and practically they all have to have that access, right? But how about those people in the margins, for example, in the in those people in the rural areas, etc. So therefore, all stakeholders in the Philippines have actually leveled up to ensure that they also contribute to the objective of providing, what we call the data democratization, no? Wherein everybody should have access to cheap data services, to efficient and quality data, right? So in the same token, that if you are to put that in the banking and finance sector, same thing, right? So especially now that we are, for example, we're providing services as well for government insofar as the distribution or disbursement of social amelioration program, or what we call the emergency cash subsidy. So practically, even those poor and vulnerable households or family members who are part of that government program would have to have access to that digital, digital services, because so that they will be able to, either do transfers or do bills payment, etc., etc. Because note that during the hard lockdown, practically more than half of the branch networks across all banks in the country were practically closed, right? So it forced everyone to really go digital, because no one was really allowed to go out of their homes because of the fear of potential infection or transmission of that virus, right? So the thing here is that everyone in that ecosystem was able to really level up and really improve on their services, no? And I think to your point about will virtual banking be just the end all and be all, I would say that the success and or failure of virtual banking in the Philippines will also hinge on all other peripheral items, such as the infrastructure, which would require you to have a robust connectivity, interrupted and cheap data, or affordable data services to ensure continuous service, right? And at the same time, the ultimate metric of success would always be consumer adoption, on how the Filipinos would be embracing and would sustain the usage of digital channels as part of their everyday living, right? So it now becomes part of their lifestyle. It now becomes second nature to them, that whenever they do payments, whenever they do, deposits, or cash in, cash out, etc., or buying insurance products, you could practically do it not in the branches, but you can do it through the use of your mobile device.
Thank you, Lito. What I'm sensing you're saying is that the digital divide, that gap, is narrowing as we go along, largely driven by this pandemic. So maybe let's move on to another panelist who might want to chime in on, given this kind of infrastructure issues, digital divide, whether virtual banks are the right answer for financial inclusion. Anyone else from the panel would like to take this question? Vijay, Shweta, Basu?
So Vincent, I'll just add a couple of data points.
Sure. Go ahead, Vijay.
As we all know, Philippines has got 7,000 islands and it's widespread, right? So just by that fact alone, virtual bank, just by that notion of 7,000 islands across the whole country, virtual bank has to be the solution, because no way another branch banking concept or a traditional branch banking concept can solve that problem in itself. And it's evidence in the results today, where we see only 30% of adult Filipinos have access to a bank account. So the results are there for us to see. So really, the future has got to evolve, and virtual bank has to be the solution. But this is not a silver bullet, and one shot it will solve everything overnight. This is going to be a journey to completely modernize the infrastructure, to revamp how banking is brought to Filipinos, by leveraging technology, and also not only from availing banking digitally, but also coming up with really meaningful solutions that are relevant and targeted to those particular segments today, which are today not in the periphery of the banking services. So there are a combination of factors that needs to happen. One is obviously the reach of broadband and the internet, but also on the regulatory side, there's also been advancements and changes to allow those that are today unbanked to start having a starter and simple bank account. And this has also facilitated the adoption of banking for those today who have not a participant in the formal banking network. And just a couple of data points for us. We're happy to see at least in the high 30% of our customers. Actually, now we're at 2.8 million customers. So the data point that you mentioned earlier was a little bit dated. So from that base that we have, 30% of our customers, this is their first banking relationship. And we have a sizable, large population of our consumers today that come outside of the Metro Manila region. So this is evidence that virtual banking does resonate, and it does appeal to consumers, and also far-reaching. But of course, this will take time. This will take time to reach the most remotest of places. But this is a journey. I think we're starting the right time, and this evolution will happen. And I think the adoption will grow in the next coming near-term future.
I think 28% is definitely very encouraging numbers. Yeah, Shweta, you would like to add something to this conversation? Go ahead.
Yes, just to add, there are numbers that speak of it. There is more than 100% mobile penetration in Philippines. 2/3 of Filipinos have access to internet. So taking a mobile-based banking to them would be much faster than taking a branch or an ATM to them, considering where they're located. So I do concur with what Vijay mentioned, that extending mobile banking or banking through digital channels is going to be a lot faster way of including them and allowing them to open bank accounts, as against trying to look for a branch-based banking. So we are going to see positive results of this.
Thank you, Shweta. And Basu, do you have anything to add to this? Yeah, go ahead.
Just to add what Vijay, Shweta, and Lito said, digital banking is the way to go. That's for sure, right? There are a large population which were unbanked. It's given. There are geographic reasons because of which we need virtual banks and digital banks. But another thing which the digital bank is helping population, helping people, is their desire to have a digital identity, right? So across the region, Philippines included, we are seeing that population, we are going to use, are already using digital bank accounts, virtual bank accounts as their digital identity for getting other services, maybe the government services. In this pandemic, if they don't have a bank account, the government benefits, government donations are not reaching them, right? Or reaching them in a form which is not the best way to reach. And so these virtual banks accounts, these digital bank accounts are giving them that face, that digital identity, which they can use for other business and transactional activities. So that's where the importance of digital bank becomes super critical.
Thank you, Basu. Now, just want to quickly go back to numbers, right? Because Vijay mentioned that 28% of their customers are interacting with the banking institution for the first time. So what is the number like for RCBC's Discard? How many customers that you recently onboarded for your new app are banking for the first time, Lito?
Yes. Okay. Our monthly active user is at 66%. That is actually high for against benchmark, because normally benchmark industry benchmark would range from 10 to 20%. And the good thing here is that over 70% of our base would be coming from outside Metro Manila. So meaning this would be, of course, that in the National Capital Region or Metro Manila would have 70% of economic activity across the country. And ultimate issue would be on how to level the playing field and on how we can empower the other regions outside Metro Manila to also be economically viable as well. But you'll be surprised that in terms of demographics and sociographics of the Discartec subscribers or users right now, in fact, even our social listening results from the time that we launched this, it started at 94% positive sentiment to now, as of last Friday, to as high as 98% positive sentiment. Because one thing I think that that Discartec was able to address was the issue on communication. Because it is the country's first and only Taglish inclusion super app. So in terms of being able to address that pain point of the users being able to comprehend and understand what the instructions are and how you can make the financial terminologies more consumer-centric, meaning they'll be able to easily understand or comprehend some of these financial terminologies that are, for example, what does financial literacy means, or for what does financial education mean, for example. So it is, or savings or insurance. So what we are now trying to address is on that education piece where the understanding would have to be addressed. And I think with that, we were surprised ourselves because the top notcher insofar as search would be coming from regions, even in the remotest regions, or what we call in the Philippines to be the impoverished, the most impoverished regions in the country, which is the Bangsamoro Autonomous Region in Muslim Mindanao. They are number one insofar as the total number of residents who are trying to access and trying to search on what Discartec is all about. And the good thing here as well is that the activity rate inside the app is so remarkable that we have actually exceeded our numbers beyond our 2020 target. In fact, our numbers are now based on the targets that we have set for 2021. So I think we are. It is not about, because especially for banks like us, for traditional banks like us, as compared with fintech players, that fintech players would have practically millions of marketing dollars to spare in terms of budget for them to really promote their services. But for a typical bank like Rcbc, for example, we're so constrained with our marketing budget, right? So I think our budget would only be about less than 10% of whatever marketing budget that fintech players would have. And I think it really would be the product. I think we give it to the product. In terms of having that impact in terms of relevance and how it has become responsive to the needs of its target market.
I think that largely depends on which market, right? Because for some markets, the fintech companies are still quite nascent. So you'll find that maybe sometimes for a bank's marketing budget, it would be more than their entire funding. So it really, I guess, depends on which region you're talking about. So there is some follow-up questions here from the audience while we're talking about numbers over here, right? So one of the audience member, Mary, is asking, both Vijay and Lito over here. I'm not sure if you're able to divulge this number, but if you are able to, please feel free to share. So Mary is asking, what is the average number of banking transactions made per month on CIMB and Rcbc? If you guys are able to share this.
Vijay?
We don't disclose our transaction numbers. We today have most of our customers transacting with us at least 3 to 4 times a month. So that's once a week. That's the kind of the range that we look at the active user. Yeah, so out of the 2.8 million customers that I said that we have, a large majority of them, if you look at their average, those that are active, the average transaction will run about 4 to 5 times a month on an average for those that are active. So you can by that infer the total transactions.
Okay, very cool.
Yeah, I think for us, for
Rita, you want to add?
RCBC, for Rcbc, for this card tech, I think, one of the things that we are very, very happy about was, being able to present to the consumers what we call sachet banking, right? So because the Philippine market is known to be, a retail market, right? So we have over 1.3 million mom and pop stores. We call it sari-sari stores, right? And we're so used to, buying in sachet, right? So because, especially for Filipinos who are, or part of the work, of the majority of the population, especially in the impoverished areas, right? So the thinking here is that how do you now mimic and replicate that culture or mindset of the Filipinos when it comes to having that sari-sari store or retail mentality, and put that in the context of financial services. So in our case, for example, we did introduce sachet insurance. For example, if you can buy an insurance product for as low as 40 US cents and be covered for about a year, and so on and so forth, and being able to making sure that everything is affordable, right? Because again, the experience will tell you that once they are part of that ecosystem, then you will now be able to drive them to continuously make use of that transaction. So in our case, for example, as I've said, our monthly active user rate is about 65%, which is practically 6x the industry benchmark. And in terms of the activity rate insofar as transfers, as bills payment, e-loading or airtime top up, etc. So it is actually, I think the blockbuster amongst all of those services or features would be airtime top up and transfers, because when you say transfers, this would be from this CardTech account to another account, because we are all part of InstaPay, that wherein you could now transfer funds to any of the over 30 participating banks and wallets.
Thank you for that, Lito. Now, I kind of want to quickly take a step back, because when we were talking about financial inclusion earlier, there were a few things that were brought up in terms of being barriers to financial inclusion in Philippines, right? Now, I think, of course, naturally, Philippines has made a lot of headway in addressing some of these issues, from working on the national ID to improving the credit system within the Philippines. But from the viewpoint of the panelists, what do you guys see as other barriers towards financial inclusion in the Philippines? Would anyone like to take that question? Vijay?
So I'll go. I
Sure.
think.
Okay, go ahead.
Sorry, Shweta. I'll just say, to me, I think what we have seen, the market is, and the regulators have evolved very nicely. The typical barriers that you would see in most other markets, in Philippines, those have been largely resolved. Of course, we spoke about infrastructure a little bit earlier, but putting infrastructure aside, which is a natural disadvantage of having 7,000 islands, but putting that aside, even if we talk about national ID, we have pioneered this. We're the first bank that pioneered facial recognition in the country using multiple IDs. So even with multiple IDs and not having a harmonized single unified ID in the country, we were able as the first bank to solve this and use facial recognition to accept the numerous IDs that the country has. So if you look at it in a whole, for us, from a CIMB bank perspective in the Philippines, all the drivers and all the ingredients to drive financial inclusion and virtual banking, it's there now. So that's really an advantage and a huge plus, if you will, for virtual banks like us to thrive and grow.
Excellent. And Shweta, you wanted to add something? Please go ahead.
Sure. So I'm going to give a very technology perspective or a viewpoint on barriers. I wouldn't call them barriers. In my view, they are areas which need to be worked on to make this a more success story for Philippines. And one of the areas is the eKYC and the digital ID. Now, when we talk about the financially excluded set of customers, which is a very large segment, they don't have the formal data which is working to their benefit, which allows them to open an account. Data like passports or a national ID card or a driver's license. And this is where BSP would need to step in and create those opportunities or initiatives which can help bank to open accounts for them. So there is an architectural stack of policy framework that is coming out from BSP, the PhilSys, the Philippines Identification System, which we believe is going to be by 2022 covering the entire population. And that would hugely help for these customers to open accounts, for banks to build that trust and to bring in that financial literacy which Lito was talking about, to educate them on some of these products. So there is work to be done. They're not barriers. I think they're opportunities. And I'm sure cloud is one other area for banks to go on cloud as the standard deployment method would be an area that would need to be really worked on, because that's going to give a huge benefit to the virtual banks as well as the incumbent banks.
Excellent. And Basu, do you have anything to add to this?
I just echo what Shweta and Vijay said. Nice to my ears. I wouldn't say it is a barrier, but every bank needs to build a trust. This is a new model. So they need to first build a trust on the customers that their money is safe, right? And that will take some time because it's not CIMB and Rcbc, which is traditional. People can relate them with nice big offices, establishments. So automatically the trust gets built on. But imagine a bank, which is typically a faceless bank organization, and the digital is a connection to the customer is only through their mobile handset. The trust will take some time. And this trust will get built based on how they have their experience captured in working with the bank. So that's where a lot of process-related changes needs to be defined, from a traditional banking operating processes to the streamlined, very thin processes. For example, can be KYC with facial image recognition, can be the whole customer onboarding, can be the whole loan origination processes. It cannot be a traditional banking process, regulatory driven only, or the operating model driven only. It has to be a fine balance. And these processes has to be 3 clicks, 4 clicks, absolutely streamlined. That will build the trust working with an organization, working with a new generation of engagement through the digital banks. So that's very important.
Thank you. And I guess on that note, because right now, majority of the virtual banks, as you said, still coming from establishments like CIMB and also Rcbc as well. With the new framework coming out, surely there will be a new wave of players coming in to disrupt the market from the incumbents. So I guess from a technology viewpoint, maybe this question would be quite suited for Shweta and also yourself, Basu. Like with the kind of legacy systems that the existing incumbents already have, how do they defend themselves from the possible big techs that maybe might enter the market post the digital banking framework?
So I would like to take that question.
Go ahead, Shweta. All right.
Looking at the unbanked segment, I believe that incumbent banks don't have much to fear in terms of a slipping market share to the virtual banks. I think what they need to work on is, because of COVID, the digital transformation journey has started with these incumbent banks. So they have understood that online and mobile banking is a key way of reaching out to the customer when other channels like branches or ATMs and POS are out of reach. But what needs to be thought through now is the legacy core banking transformation. And we are talking to a lot of banks in the country, and we are working with them on this journey. So they need to look at their core, and they need to bring in the core transformation ahead of the digital acceleration, because they need a core which is open, which is API driven, so that they can do Face ID and eKYC and AML integrations, because That's where the virtual banks will start scoring. Because they are faceless or because they are branchless banks, they are bringing in the differentiation through their services. And that's where legacy or incumbent banks need to start thinking through. They have the advantage of the physical presence of branches and ATMs and POS terminals. What they need to do is make sure that the core can handle these changes that are happening, technology advancements that are happening. If they can handle it through data analytics, let's say, they need to offer more customized products. Like if you're giving a loan, now with the whole new segment opening up, you can't give a loan which is monthly repayment for a family, which is seasonal income in nature. And that intelligence cannot come just because you know your customer. It can come through technology, through systems, through AI, ML tools. So this is an area we believe that incumbent banks need to start working on. And they also need to start accepting that there is a symbiotic convergence that is happening between technology providers, fintechs, and banks. And they will need to start accepting that there are going to be more fintechs, and they're going to be they will need to start looking at how to talk to these fintechs for, let's say, wallets or for e-payments capabilities. So that's where the fundamental change needs to be brought about.
All right. Basu, anything to add to that?
Why we see the fintechs and neobanks bringing in some kind of a tech advantage over traditional banks, but we see the traditional banks which are getting into digital mode is also sitting on another big advantage. They know this market well. They know the customer behaviors well. So more and more we are seeing these traditional banks going towards the Horizon 3 view, which is transformational view, where they're trying to develop the whole customer engagement strategies based on the insights they have developed over the years, right? When Lito is talking about the sachet banking, that's the experience the traditional banks are bringing on the table. How can they do the sachet insurance coupled with the sachet of savings bank deposits and the loan, right? The whole product bundling part of it, the whole relationship-based pricing part of it. So each of these segment players will bring in their own advantage. Obviously, the midpoint will be the technology handshakes. So we see the neobanks bringing in that technology where they are more agile and API-led to start with. But with traditional banks also moving that direction, they're also opening up their infrastructures, they're opening up new systems. They're going for software as a service solutions like the one Finastra provides. The whole banking operating platform of Finastra can be deployed in few weeks, which is already done in Philippines for some of the neobanks. And then you can start operating your regular business. So that's the model we are seeing emerging, not only in Philippines, all the Asian markets.
Yeah, well, actually, just to comment on that, I totally agree with that statement. No, in fact, we've seen that, for example, in RCBC on the what we call, I think the word used was symbiosis, no, earlier. I mean, we've seen the financial symbiosis of, say, for example, RCBC being a traditional bank, and then this Cartech being a quote-unquote a neobank or a virtual bank or a challenger bank. And how can particularly this RCBC as the parent bank or the traditional bank be able to have that harmony with a virtual bank, such as, for example, this Cartech? So I think the strategy is actually intertwined insofar as being able to have a more compelling proposition to the public, right? So because you're right, I mean, traditional banks would still have the, would still be the earning engine or earning vehicle for for the organization, because they would have their their clientele, their the business, especially on loans, etc., etc. While at the same time having to blend that traditional setup or traditional business with that of a challenger or neo or virtual bank that you have right now. So because at the end of the day, you would want now to have to cover the entire spectrum of the market. Say for example in RCBC we have our own mobile banking mobile app as well that has been in existence since for a couple of years right now. But that is really meant for the mass affluent market. But we now came up with this Cartech as another app which is really meant to address the mass market. So you have the mass affluent and the mass market, and practically covering the entire spectrum. So in this particular sense, you are now seeing a holistic view or a holistic offering or proposition that is now being presented to the consumers. And you're right as well. When we are talking about sachet banking, or having to make this in a way retailing retail banking, no? In the context of mom and pop stores or sari-sari stores, practically, if I may term it, FMCGing the financial services. So FMCG meaning fast moving consumer goods, right? So it is just as if you are getting those services out of the shelves and being able to experience that and use it for yourself. So I think the whole strategy should be more of a blended one, to make sure that you practically capture every piece of the act. I think you're on mute. Yeah.
We can't hear you, Vincent.
Vincent's audio is on mute.
While Vincent comes online, I see one question whether digital banks are more open to fraud. So maybe that's another area where Vijay, Angelito, and Shweta, you can share your insights.
I could start with that.
I see a question on that.
Okay. I don't think, and I think we did cover this during our discussion, that the trust needs to be built with digital banks. They are faceless. They don't have a branch presence. You don't know who you are talking to or dealing with. And people are hesitant to give money to someone that they can't see in person. So there is a trust that needs to be built. But I don't see them as a potential, or I don't see that they are open to any kind of fraud. They are governed by as strict standards as the incumbent or the branch banks by the BSP regulators. So it's just a matter of time that they need to advertise and sell themselves and explain how they can offer the same services without the physical branch presence. But I think it would be a matter of time before people get used to it. And just to give the experience, in APAC, Hong Kong was the first country that launched the virtual banks. Singapore's following it. Malaysia is close to following it. We do see that there is a hesitance, the initial hesitance, but the acceptance is coming soon. And more people are happy to operate their banks on the phone. So I would disagree with that statement.
Yeah, but if I can just add on to that also. Yeah, we can hear you, Vincent. Okay, so I'll just add on to Shweta's point. So I agree.
Go ahead.
So I want to just pass the question to delineate trust and fraud. So the trust issue is the feel-good traditional notion that I must see my branch and I want to look at that physical building so that I'm comfortable that the bank exists. So if I need to someday run to it, it is around the corner. That's a trust issue, which over time, I think people will start to change and their behavior will evolve. That's a trust issue. But from a fraud standpoint, I would say digital banks, our fraud capabilities and our fraud controls is at par, if not better than what traditional banks have, because this is our core business. We're very focused and we go very deep in terms of implementing fraud protection, fraud analytics, and really spending a huge amount of our budget on ensuring that the fraud parameters and the fraud controls are in place. And I'll further argue, when we started this whole eKYC journey here in the Philippines as the first bank doing it, the case was quite apparent. If someone walks into the branch and just bringing an ID which can be manufactured, here we're relying on a person in the branch and using their judgment to decide if the person walking to the door, one, is that same person on the ID which can be manufactured, and B, if that ID is genuine. But when we use technology, then there's a lot more of machine power that goes behind one, authenticating the person is the same person on the ID. Two, ensuring also that the ID presented is actually a genuine ID issued by the respective governmental bodies. So I would, at any time of the day, take a decision that is made of a machine of looking at over 10,000 or 15,000 variable inputs into that decision vis-a-vis a human person making a judgment over the counter. So that's my personal opinion.
Thank you for that, Vijay.
Very well said, Vijay.
Yeah,
Vincent, you're back. Go ahead.
I'm back, and it was the perfect question you were going to pick, because that was the question that I was going to bring up as well. So I think, somehow telepathically you picked the question I was going to pick as well. So moving on, and one of the report by S&P said that it will take 3 to 5 years for the new digital banks to be profitable. So I was just wondering whether the panelists agree with the assessment. And interestingly, I noticed the person who wrote the report also asked a question over here. So we will jump to the question shortly. Anyone who would like to take this question, please go ahead.
I think, I'll take that question. I think I would agree to that, a study or that article that was written about, about virtual banks or digital bank generating or recording its, making it profitable in the next 3 to 5 years, right? So I think note that payments as a use case will not be the sole engine for growth, right? Because payments will definitely be one of those services that will make it the experience worthwhile, and to make everybody transact with you, right? But there should also be other use cases or features in your proposition that will practically drive revenues for you. And of course, profitability would ensure sustainability, right? Because at the end of the day, we're not here for CSR. We're not here to just provide a wow factor to everyone that's saying that you have the most advanced technology, etc. Because no matter how robust or how sexy your mobile app is, at the end of the day, the ultimate metric of success is consumer adoption. How you scale and be able to generate revenues out of it will be the ultimate measure. And how it now, and I think the CSR component there would already be the impact that you are providing in terms of changing the lives of most Filipinos, in terms of them being able to be part of the formal financial system. So I totally agree with that findings. And I think we're seeing it actually when we launched this card tech 2 months ago.
Thank you, Lito. And Vijay, do you agree with the assessment?
So I have CIMB. We have a little bit of a different view when it comes to digital banking, because we don't necessarily look at digital banking as our main model. So we have a platform model which we try to build on that platform banking concept. Let me give you some examples. So today, as some of you may know, CIMB Bank Philippines has partnered exclusively with GCash, a leading e-wallet in the country. And jointly, we have grown and we have acquired over 2.8 million customers. And we started this journey by offering 4% interest rates back in Q1 of 2019. And the partnership has evolved, and now we're going to power G Credit, which is their lending proposition. And so the entire G Credit lending portfolio will be powered by CIMB. The point I'm making is, and we necessarily don't drive customers to our app. We allow customers to establish their banking relationship with CIMB on our partners' app. So we look at digital banking as just a conduit, but the whole bigger picture of it, what is our digital business model? What's our platform model? How do we create a long-term sustainable business model, and working with partners and collaborating with ecosystem? So CIMB Philippines don't necessarily go out there and acquire customers alone by ourselves and measure that as a metric. We look at how we can collaborate with ecosystem of partners, offer our banking solution through our partners platform, and enable their consumers. At the same time, we also grow in terms of customer relationship and new acquisition. So our model is very different. We don't acquire customers on our own. We don't go out to the market and you won't see us acquiring customers on Facebook, on Google, because we have multiple partners that we work with, collaborate, and we create joint solutions. So that's the kind of a model that we have created. And through that, the financials also are very different. The efficiencies we get working with partners to arrive to scale and to lower our cost to serve, and using the partner data to leverage the banking relationship give us a huge advantage vis-a-vis going out on our own. So we see that this is actually quite different for us in terms of the 3 to 5 year roadmap with the efficiencies that we have.
Thank you for the insight, Vijay. Now, Shweta and Basu, do you guys have anything to add from the regions that you guys work with your clients on? Or shall we move on to the next question?
I could just quickly add that if going for a pure play digital bank in defense of their views, I would say yes, there is a break-even point that is being world over argued as to when do digital banks break even. I wouldn't give it a 3 to 5 years time frame. I think there are 3 key vectors that digital banks need to operate on. One is their sweet spot. What are they trying to market? Is it a deposit and loan? Is it a card, or is it a payment only? Once they've found that, they usually tend to use technology as a key to innovation. They use their channels, and that's where they cut down cost. So there is a cost factor. While there is a revenue factor being discussed, there is a cost factor where digital banks are hugely ahead in the game. The other factor is how agile they are. They usually tend to make less mistakes, or they understand the products and their markets, and they're quick to change their strategy because of the technology advances that they have. And the third big factor for them is cloud. So we work very closely with Microsoft, and we have seen that digital bank story on cloud with a very low capex and only the operational expenses that they're looking at, it does give them the advantage. So we need to look at the cost factor along with the revenue factor to see how they would probably break even a little earlier than this 3 to 5 year cycle that we are talking about.
Thank you for adding from that perspective.
Yeah, I just
Lito, go ahead.
Yeah, I just there's a good comment there. No, I would like to expound on that, because you're right. It's not really just solely on revenues, but also on cost saves. Because if you are to look at, or if you are to define what digital revenues would be, of course, it is not just on the income, but also on the saves that you will be able to generate out of you being agile, because of the efficiencies that you have actually introduced. For example, how much would it cost for you to onboard a customer in a branch setup, right? How much would it cost for you to service an over-the-counter transaction by a client going inside a branch? But if you are now to migrate them to going digital and have that interface or interaction with your mobile app, so that cost saves that you are supposed to be spending for servicing a client in branch or physically we should also be computed in the overall framework of digital banking, right? So because the likes for example of cloud banking as against having an enterprise on-prem setup, right? So the traditional banks would be using that core banking system that would be charged on an enterprise-wide costing, right? So regardless whether you have 1 million clients or 100 million clients, I mean, the price would be the same, right? So, but I think with you being agile and you having to have those cost saves will definitely define what digital income would be.
I think Vijay's puppy in the background agrees with you.
Yeah, so no, actually, I think it's definitely true. But Vincent, I think the real The real crux of the matter is it's really execution is everything, right? The strategies,
Naturally.
and you think about all the lofty plans, they're all good to have, but
Yes.
the strategy needs to be executed. Having the right talent to execute is key. Having a purpose. So I think we all must step back and say it's not about the 3 to 5 years break even or profitability metric only. That's the end. But to be successful as a virtual bank or any organization for that matter, we must define our purpose. What are we here for, and what are we solving for? I think that's the first thing that we in CIMB Philippines always go back to the drawing board and say, what are we solving for? Are we creating something that's addressing an unmet need? Is it value creation? Is it being relevant to the consumer? Is it creating a sustainable long-term value to the markets which we operate in? And if the answers is yes and all the above, then I believe that your break even, your payback will all happen. And most of the time, if you hit those check boxes right, it'll happen quicker than you originally anticipated.
Those are all very salient and important points. I think, Basu, you look like you have something to add to this as well. Would you like to add to this?
Yeah, absolutely aligned with Vijay, what he's saying, because as I started, there is a cost to carry cash, right? And if the cash market is the biggest target market for all this digital and virtual, right? And so purpose is if to bring the whole ecosystem into a digital economy, then nothing better than driving a low cost base software, which is on a shared services basis, infrastructure, which is a shared services basis, because your digital revenue streams are also sachet sizes. So how do you match that will be super critical. And absolutely, technology, more you go technology deep, it reduces your cost, because obviously you are reducing your turnaround times, you're reducing your human interventions, you're reducing your time. So all this adds up to reducing your cost structure. Super important.
Thank you for that, Basu. So we are unfortunately short on time, but I'd like to take one more question from the audience, and then we'll do a round of closing thoughts. So this question came from Nikita from S&P Global. She wrote the report that we were discussing earlier. And her question is, how are existing virtual banks doing credit assessment for first-time borrowers given lack of credit scores and credit history? So maybe we can do a quick answer to this one. Anyone would like to share some insight in this area? Go ahead,
I'll take
Vijay.
that, Vincent. So today, virtual banks today, at least the ones that we see, I think lending is a bit of a new thing, and some have not even started. For us, we have started lending back in 2019, and as I mentioned earlier, the concept of CIMB Philippines and our model is working with partners. So CIMB Philippines is not a standalone digital bank. So by working with partners, and I alluded to earlier, the advantage of getting the data that the partner has and using that intelligently in your risk scorecards, in your risk modeling, to then ascertain, these are all alternative data which you won't typically get from the credit bureau. And using those data that you have with your partners and using that as your underwriting scorecard really helps us a great deal. So that's kind of how we find that sweet spot in terms of determining customers' credit worthiness. We're getting alternative data and specifically working with our partners to enable that forward.
I think that's really key. Would anyone else in the panelists like to chime into this before we move on to closing thoughts?
Yeah, I think just one comment on that. In that regard, I totally agree with Vijay, because in virtual banking, the core would be what we call open banking, right? So open banking, open APIs. That's why the operative word has always been collaboration, right? And practically with that open banking API, open API concept, and of course, BSP is one of the the regulators around the world that is now even supporting or embracing open banking as well. It's really hinged on having to have this various collaboration across all players in the industry. That's why even coming up with your decision modeling when it comes to credit provisioning is really something of a collaborative effort across all players in the industry. Of course, we also have other, other partners in the industry, such as the credit, the credit bureaus, for example, or even the credit information corporation and other entities, for that matter, would really, constitute what we call as having to come up with an alternative credit scoring algorithm.
Sure. Thank you, Lito. And Shweta and Basu, would you guys like to add anything from the clients you've worked with in other regions, or otherwise we'll move on to closing thoughts?
So just, there we go.
Let's go ahead. Shweta, go ahead.
So I think it's more on the digital footprint, which I did mention earlier, that I agree with what Vijay and Lito said. Not everything is going to come from the credit bureau. So you need to understand the other aspects like the social media posts that your customers are doing, the airtimes they're purchasing, data packs, phone packs, online purchases. All these data points will have to become a key consideration to understand your credit checks for your customers. So it's all about data.
Wonderful. Basu, you wanted to add something?
Same thing, because we are seeing alternative credit scores like Credo Labs and Femdo have already started, where mobile top-up data, ride-sharing data, all this is adding up to the creditworthiness of the individual. So this model is being developed across the region, including Philippines. Quite a lot of new technology being used, including artificial intelligence and machine learning algos. So this is not going to be a major problem because now we have enough data points to create a credit score for even a non-credit person.
Great. With that, let's move on to some closing thoughts. I mean, of course, if I had a choice, this discussion would go on much longer than this. But everybody only has so much time in a day. So let's close off with maybe a quick final thought. And let's start with Lito, Vijay, Shweta, and then back to Basu. Lito, your closing thoughts for today's session.
Okay, again, once again, thank you so much for giving me this opportunity, for the invitation, and to all my co-panelists, thank you, as well as to all our online viewers. I think this is a very timely topic on virtual banking, and we welcome the participation of more players in the Philippine banking landscape, and welcoming all digital players in the industry, because at the end of the day, the ultimate winners of this particular initiative that is being spearheaded by no less than our regulator, the Bangko Sentral ng Pilipinas, together with our industry players, fintech, or even banks and non-bank institutions, would be the consumers. So consumers would now have a wide array of choices in terms of determining which of those entities or digital players would best serve their needs. Thank you.
Thank you, Lito. Vijay, please go ahead.
Thank you, Vincent, and thank you to my fellow panelists and to all the audiences. Appreciate the engagement. I think it's a very good session that we were able to share thoughts and feedback. Clearly, this is a beginning. It's not an end of the conversations around virtual banking and digitization of the financial services industry, and completely agree. The winner here will be the consumer. So as more banks innovate and more banks push the boundary, we can already see the consumers will be the end winner. And as a whole, the country will develop. I think this is a bit of an element of nation building, and we are very happy. CIMB Philippines very happy to be part of it. And we look forward to more opening up and more players coming to this space.
Thank you, Vijay. Shweta, your closing thoughts?
So thank you, Vincent, for having me. At Finastra, which has a very large presence in Philippines already, we believe that this is a very welcoming news for the country. We are looking forward to a co-transformation and a digital acceleration that we are going to see as technology providers, working with banks and helping them through this journey through a next-gen core banking system, and to help them capture a larger market share and provide better services to their consumers. So thank you so much.
Thank you, Shweta. And Basu, your closing thoughts?
Yeah, thanks for having me here. As I said earlier also, Finastra, Microsoft together, we don't see technology being a limiting factor for digital banks. We can be the biggest enabler to launch a bank fast and quickly start the business, because today we are in a position of experiencing so many of digital bank setups across the world. So we can together bring that expertise into Philippines market as well. We have already started doing that. So from technology perspective, the technology is ready, just needs to define the business priorities, business areas, and start adopting those technologies for business growth. So that's about it.
All right. Thank you, Basu. So with that, it only leaves me to thank all the audience for tuning in for the whole hour today, and for the panelists to spare the time and really impart your wisdom and knowledge on us, and also for Finastra and Microsoft for organizing this. In fact, we at the Fintech News Network are very interested in the developments in the Philippines, which is why we've also worked with the Fintech Alliance Philippines to launch a dedicated Fintech News Philippines site to really monitor what's going on. So I hope you guys can also check us out. And with that, thank you for joining us, and have a wonderful day ahead, and enjoy your lunch, guys. Take care now. Bye-bye.
Thank you.
Thank you. Bye-bye.